This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices skidded on Thursday for a sixth session, hitting lows not seen since May, pressured by a stronger US dollar and concerns about weaker demand as COVID-19 cases rise. The oil market rallied throughout the first half of 2021, but the newest wave of coronavirus infections throughout the world has sapped global travel and threatens economic activity. That comes just as major oil producers are readying supply increases and as U.S. drilling activity edges up. There seems to be a lot of people getting squeezed out of long positions, said Phil Flynn, analyst at Price Futures Group.
India could export 6 million tons of sugar in the new season starting in October even without government subsidies, with global prices making overseas sales more lucrative after rising to their highest in 4.5 years, industry officials said on Wednesday. New Delhi is expected to withdraw sugar export subsidies from the new season as a sharp rise in prices makes it easier for Indian mills to sell on the world market, the most senior civil servant at the Ministry of Consumer Affairs, Food and Public Distribution told Reuters on Tuesday. Even without the subsidy, India could export 6 million tons of sugar provided the market remains stable above 20 cents per pound, said B.B. Tombare, president of the West Indian Sugar Mills Association.
Moving on to the top news in the energy sector.
The world's newest oil-producing nations grabbed the spotlight at this week's Offshore Technology Conference with ambitious plans to tap oil and gas discoveries in a race against a global energy transition to lower carbon fuels. At the conference highlighting renewable and cleaner burning fuels and investors moving bets away from fossil fuels, Brazil, Ghana, Guyana, and Suriname laid out agendas to pump massive oil and gas discoveries that could reshape their economies, if they can get them to market before values erode. The contrast between the goals and governments moving to impose net zero carbon emissions rules by 2050 was clear in the first large U.S. oil technology conference and exhibit since the pandemic.
Singapore residual fuel oil inventories fell 2% in the week ended August 18 to an over 5-month low amid limited net imports, official data showed on Thursday. Onshore fuel oil stocks fell by 494,000 barrels, or about 78,000 tons, to 22.07 million barrels, or 3.48 million tons, their lowest since the week to March 3, Enterprise Singapore data showed. Singapore's weekly net fuel oil imports were down 22% to a 2-week low of 470,000 tons and were below the 2021 weekly average of 690,000 tons. Weekly figures, however, are volatile. Compared with a year earlier, residual fuel stocks were 13% lower and below the 2021 weekly average of 23.19 million barrels. Next, we have the top news in metal markets. The China Iron and Steel Association, CISA, on Thursday proposed limiting China's total steel exports and cutting shipments of lower-grade products, in an effort to ensure domestic supply amid the country's efforts to cut carbon emissions. In a proposal to industry exporters, the steel body said traders should actively adjust their export strategies and consciously reduce total export volume, to guarantee domestic supplies and reduce energy consumption. Export firms must resist the temptation to rely on export volumes and high international prices to drive profits and focus on high-end products, shipping less or no ordinary products, the association said in a statement on its website.
Copper prices dropped on Thursday to their lowest level in more than 4 months on a major sell-off sparked by China reining in growth, the U.S. central bank signposting its intention to reduce stimulus and rising COVID-19 cases. Benchmark copper on the London Metal Exchange was down 1.6% at $8,901 a ton at 1600 GMT after earlier hitting $8,740 a ton, the lowest level since April 1. China's government is determined to slow growth. They have been flagging this since March. We have a virus that won't go away, and Fed officials expecting to reduce bond buying are hurting commodities, said Liberum analyst Tom Price.
We will now look at the top news in the agricultural sector.
The Bursa Malaysia Derivatives Exchange, BMD, is aiming to ramp up participation in its benchmark palm oil contract with the launch of night trading, which traders say will align it with most global markets that run nearly around the clock. The BMD is set to launch after-hours trading in December for its crude palm oil futures contract that is the global benchmark for prices. We are one of the few exchanges that do not offer night trading so far. It's about time that we do align our market practices to our global investors in the correct manner, BMD Chief Executive Officer Samuel Ho told Reuters in an interview.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.